Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday, the 23rd of April, St. George's Day. Starting off with Braveheart Investment, which has actually been one of the best performers, I would have thought, on the Bulletin Board Heroes in terms of the charting working. Here we've got a situation where it might work again. We've had a triple support for the shares in the mid-50s for March and then this month as well. Breaking that line of resistance from the end of March around 62, 63 pence, and above that looking for a return to the 120 to 140 area, which is the top of the range. Since February, we'll hopefully get an end of day close above the 50-day line today at 74 pence, which would be a decent trigger for those who are a little bit unsure, but that last little bear trap below 60 pence has probably sealed the deal in terms of the shares moving to the upside. Just about to get a buy cross in the MACD window and also the RSI above 50 on the RSI indicator, right in the zone in terms of heating up for some upside. This stage only back below 62, 63 pence, and that broken resistance line really delaying the upside scenario, but I doubt if the shares need 4 retests of that sub 60 pence zone. Moving along to stock which is delivered for a lot of the punters, Barron Oil. And interesting here that I was looking at the shares when they were around 0.07 earlier this month, and although we had another test for on the 0.06 support area, the idea of a gap fill reversal has come true, and also we haven't been that far off. In fact, the top of that broadening triangle from last summer, which was hinting at a 0.15 target, we should be able to get 0.15 if we can get a decent close above that last February resistance at 0.11. Let's see if we can get an update today to get us to 0.15 early next week. This stage only really back below that initial April peak at 0.09, really delaying the upside scenario. A stock which has also delivered quite well for the Bulletin Board Heroes is Capex. Here we've got a situation where we've broken this line of resistance there, and the 50-day moving average around 9 pence. End of day close and a weekly close today, or an end of day close next week above 9 pence should be enough to get the shares on their way, not only for a retest of the 12 to 14 pence post-December resistance, but also up towards a best case scenario target over the next 2 to 3 months as high as 22 pence, which is that August resistance line projection from last year. Stop loss on the bull argument at the moment back below 8 pence, and the last low earlier this week for Capex. Moving along to a rather obscure stock, but one which has done rather well in the recent past. You'll see why it's been included today on the basis of the massive gap to the upside that we've had. Gaps through resistance like that tend to be momentum signals, and so you would have been long really on the basis that the gap yesterday remained up unfilled, and the low yesterday was above the low of the gap day. So above 80 pence, looking towards up towards £1 for Catina Group, and that's probably the minimum at this stage, and that could be seen by the end of next month. At this stage, early and end of day close back below 70 pence, really delaying the upside scenario. Had a request for Helium One, which is arguably one of the strongest looking charts around at the moment, made all the more strong by the way that the shares have bounced from the placing that was last week, I believe. End of day close above the top of this symmetrical triangle at 14 pence is what we're looking for now to give us 20 pence at the top of the rising December trend channel, and that could ideally happen by the end of next month. Another strong situation, Kistos, and another request. Here we've got the situation with the shares near the high, or actually at just breaking that resistance of 187 from back in January. Overall, it looks like we're in a broadening triangle, which is heading towards £2.60, and £2.60 valid as a target while we hold above the high of the resistance area of last month at £1.78. So decent weekly close above January resistance, and while we remain above 178, looking for 260, perhaps by the end of June. On to a stock which has been very popular of late, Landor. Here it's been a bit of a slightly disappointing that we had a pullback from the 40 plus zone, but it looks as though while we're above the 50-day line at 32 pence, we're still in bull mode, and we could hit the upper 40s by over the next 2 to 4 weeks. If Be cautious on the situation after that little pullback that we've had. Maybe wait for an end of day close back above Wednesday's high at 38 pence on an end of day close basis, and that should hopefully then trigger a fresh move to the upside. Big picture target here for fans of the shares, and I think there are quite a few around, would be that March 2020 resistance line projection, which is promising a target near 70 pence perhaps by the end of June or July, sometime over the early part of the summer. But it's definitely on the bullish side while we're above the 50-day line there, and we see how that one goes. One of the stocks of the day, which is sort of revived itself of late, is Novacyt. Here it looks as though we've hit the bottom of that falling trend channel from October. You can see the shares bounced off that earlier this week. They've also broken a line of resistance from earlier this month, and I suppose we can call that around the £4 level. Yesterday's high, £4.02. While we're above 4.02, then looking for the 20-day moving average up to £5.35 over the next month or so as a best case scenario. But that target is only valid while we hold above 4.02. The added plus point, though, today is the way that we've had a key reversal to the upside, so narrowly breaking yesterday's low at 366. The low today was 365. And an end-of-day close, obviously, above that would be the key reversal to the upside, and would hopefully give us some decent momentum to the upside. You can see that we're probably a day away from an MACD buy cross as well, and that has tended to work pretty well on Novacyt over the recent past. Another requested stock today, was all over the place with requests today. Here we've got Power Metal Resources. I've been toying with looking at the stock over the last few days, but could have been yesterday, but today looks like a day where we've fully cleared that line of resistance from January. That's around the 2.4 pence level, just above the 50-day moving average at 2.35 and above the 50-day line. We're looking for further upside, obviously a retest of January resistance at 3.5 pence, the first port of call, maybe by the end of next month. 2 to 3 months target here up to 5 pence, while we remain above that 50-day line on Power Metal. Stock which is rather fiddly, and I was sort of going to avoid it, but looks a bit too good to resist at the moment. Sealand Capital Galaxy Limited. Here we've got a situation where we're looking for an end-of-day close above the initial April resistance of 1.74. If we get that on a weekly close basis, then we could start a journey towards 3.5 pence, but we need to see a decent close above the 1.175 pence, basically, to deliver that upside within that rising trend channel from July last year. Just a couple of stocks to go now. First is Sarium or Cerium. Here we can see that the shares have been reasonably buoyant over the last few days, if I get the right ticker there. Here we've got a bounce off the 20-day moving average and a nice price action today so far. The view is that while we're above that 20-day line at 1.94, looking towards 3 pence in the top of the rising trend channel from October, and that could be seen by the end of next month, or perhaps even sooner than that. Only back below the 50-day line at 1.83, really delaying the upside scenario there. Nice little bull trap situation to look at, or bear trap situation rather, to look at to finish off today. Serinus Energy. Here you can see that there was a one-day wonder probe towards 2 pence for the shares. I think that actually might have narrowly taken out that low that we had, maybe not actually, but we just retested the support area of December. The bear trap is formed by the closing back above the old support area, 2.7 pence. So while we're above 2.7 pence, that old March support, looking for at least the top of this falling trend channel from February. That's around the 3.6 pence area. Big target here, or bigger target here by the end of next month, perhaps up towards 5 pence, which is a November resistance line projection. So above 2.7 up to 5 pence for Seranis, and ideally an end of day close today above the 50-day line of 3.2 pence plus would be quite nice as well. That's it for me today. More updates over the weekend.